You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so the pair that I will be breaking down into this video is NZD USD, and the reason for which I decided to speak specifically about NZD USD is because it is very near to providing to us a good trading opportunity. So I want to obviously show you exactly what we have on the pair, and as usual, I will keep the analysis as educational as possible. So first, I will be breaking down the technical aspect of this pair. We will then go and see what we have from an order flow perspective with the commitment of traders by checking what we have on the NZD. So what hedge funds and the biggest banks and institutions in the market are doing on it. And obviously, if you're able to read how their positions are shifting in time, you do have an advantage over your competition in the market. And by the end of the video, you will know what kind of opportunity we can be looking for on the pair. And you will have also gained some very important knowledge of how you're supposed to be approaching your trading when it comes to scanning the market for trading opportunities. Now, starting here from the monthly time frame, what we can see. Now, from a monthly perspective, we consider the market has just provided a nice impulse followed by a correction. And after an impulse and a correction, what you expect is for the market to provide the continuation to the upside, possibly for the creation of a higher high, which is exactly what the market has now created. What we can also see is that in breaking above the previous high, the market has also broken above a very important structure area for this market. In fact, this zone was acting as structure resistance here, again resistance here, again resistance here, and the market has now broken above that zone with this very important impulse to the upside. At this point, what you have is that all this area of previous resistance is now turned support in the market, because as you know, there is a rule in the market that when an area of resistance is broken to the upside at that point, that previous resistance is turned support in the market. And what we can expect is for the market to go and retest this new previous resistance, turn support, to go and grab some liquidity before the continuation to the upside, because now this is a very strong demand zone for this market. So on the monthly, we have broken resistance and we expect a retracement. Let's go down on the weekly and see what we have from a weekly perspective. Now on the weekly time frame, we can see that we have very interesting price action as well. In fact, the market has just provided this overextended W formation to the upside, plus it created a very strong impulse in creating the last leg of the W. Now, after an impulse in the market, you want to see a retracement. Specifically, you would like to see the market retrace at least to the 0.382 of the Fibonacci taken on the impulse leg. So from the low to the high of the impulse. Now, in our case, this gives us a 0.382 Fibonacci retracement, which is exactly at this area here, which is the zone at which we expect the market to create a retracement to as our first downside target. What we can also see here from a weekly perspective is that the market has provided this candle here. Now, when you see a candle like this with a red body and a long wick, what you expect is for the market to fill in this wick with the next candle. Now, there is a very specific reason for which we want to see that. Now, if you see a candle like this on the weekly, what it actually means is that on the daily time frame, you have an impulse to the downside followed by the correction, in which the correction is exactly the wick that you see on the weekly. And generally speaking, after an impulse and a correction, you expect the continuation to the downside. So what we actually have is a retracement on the daily, which is the wick that we see on the weekly, after which we expect a continuation to the downside, which is exactly the next candle, which is supposed to fill in the previous wick of the previous weekly candle. So on the weekly, we have many confirmations for a potential shorting opportunity. And if we go down on the daily, we can see that what I just said is exactly what we have. In fact, we have an impulse to the downside, followed by a correction, and this correction is exactly the wick that we have from a weekly perspective. And after an impulse and a correction, you expect a continuation to the downside to go and complete the pattern at this horizontal ray, which, if you remember, is the 0.382 of the Fibonacci taken on the weekly impulse. So everything is lining up for a nice shorting opportunity at the moment, but we still haven't finished our analysis. Now, first of all, I had spoken about NZD USD quite a few times in the past. I spoke about this pair when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see this move to the downside, and that is exactly what the market did. Then I spoke about NZD USD again when the market was here, and I explained all the reasons for which from here first we wanted to see a retracement, and then the continuation to the downside for the creation of a lower low, and again, that is exactly what the market did. Then the market created this move to the upside, printing this overextended W formation. And after this overextended W formation, I made another breakdown explaining all the reasons for which we wanted to see this move to the downside. And again, that is exactly what the market did. Then we had the creation of this W formation, after which I made another breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this a big M formation both on the weekly and daily. And I made another breakdown when the market was here, explaining all the reasons for which we wanted to see first a move to the upside and then continuation to the downside. And again, that is exactly what the market did. The market then stopped at the previous low and created this channel here. And the market has been moving in this channel for quite some time. And I spoke about it a few times also in the channel. I spoke about it after this W formation. I explained all the reasons for which from here first, we wanted to see this move to the downside. And then the continuation to the upside, then we broke above this channel with very important is strong for our structure, and we created this massive impulse to the upside. Now, by the way, I will link in description all this previous analysis so you can go and check it out for further reference and more free education. You find all this previous analysis linked in description so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, if you're asking yourself, why has the market created this massive move to the upside? Now, this will help us also understand why we want to see a retracement. In fact, if we go and see what we have from a COT perspective, so commitment of traders, so what hedge funds are doing in the market, if we check the data for NZD USD, then what we can see is that hedge funds have been adding massive long positions on this pair. We went from having 16K long positions all the way up to having 34.7K long positions, increasing the net positions dramatically. We went from having 3.3K net positions all the way up to having almost 14.2K net positions. So a massive increase, meaning that institutions were buying aggressively NZD USD, and the market in fact created this massive move to the upside. But what we can see with the last report, we can see that we have decreased long positions from an institutional perspective. In fact, we see a decrease from 34.7K to 28.7K. Now, 34.7K is one of the highest amount of long positions that we had on NZD USD in the past. And that is why we did expect the market makers to start taking their profits on the longs, because they had capitalized on all this move to the upside and they now have a massive exposure to the long side, and we do expect them to actually start taking some profits on all these long positions. And that is in fact exactly what they did, closing 5.9K long positions and decreasing their long positions to 28.7K. So what we can expect is some more profit taking. And if we will see more profit taking on the longs, we can definitely expect a move to the downside and to see some short-term NZD USD weakness. So everything at the moment is lining up for a potential move to the downside. So how we will be approaching this kind of situation with students? Now, as usual, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4-hour. And on the 4-hour at the moment, what we can see is that everything is still bullish. The market has been creating higher highs, higher lows without showing any sign of bearish price action. And until this will be the case, the market will easily continue to the upside. So at the moment, we still don't have any kind of confirmations, and the market can easily create a continuation to the upside. So we will not be looking for any kind of shorting opportunities yet with students on NZD USD. In fact, what we will be doing as usual is being reactive and not predictive. What we will be doing is monitoring price action from a 4-hour perspective inside of this area. And what we will be waiting for is for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And if the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point we will be adding NZD USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good probability and very good risk to reward at that point with students to capitalize on this move to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.